right, let's get started this week. It's Monday, March 11th, 2024. It's Don Kaufman here. SPOs are down some 19 handles with just about 2.5 minutes to go to the cash open. There's definitely some size trading, but it's impossible to read volume because the roll is going on. I will actually talk about that extensively today. But with 2 minutes to go to the cash open, let's get right down to business. And there is some business over here. Once again, we are seeing some reaction in terms of volatility, something we categorically speaking have not seen here for a while. Volatility is on the move. Now, with 2 minutes to go, one of the things you want to start thinking about is like advanced decline line. And the reason I'm bringing it up early on, it's actually a rather mixed bag of goods. There's stocks like Meta that are down quite considerably, by the way. Meta's down. Nvidia is going to have just a completely wild open. Forget the fact it's down 10 or 12 bucks in the pre-market. Ain't going to make a difference. This is going to be wild into this cash open. I cannot stress that enough. Nvidia in pre-market, by the way, it only opens like kind of middle of the night, but pre-market trade has rallied, faded. I mean, was off really big, of course, on Friday after the close, all the way down to 850, bid all the way back up to 895 to fade again. This is going to be fairly intense, and obviously it's going to move markets. But there's also some brighter spots in here, like Apple has a strong bid under it this morning. So the advanced decline line is not going to be horrific, but I'm going to tell you right now, set aside the AD line for the get-go. Set it aside. It's not going to make a difference. We are talking about mega market cap that is going to be moving, well, everything. Obviously, as I said, Nvidia is going to be kind of a linchpin, but you already have Meta down quite a bit. Google's got a bid back under it. And again, you're going to come into this cash open. If you have preconceived notions of what this is going to look like, I strongly urge you to check those preconceived notions at the door. Look, markets could actually be higher by 15 handles in a matter of seconds. Let's come to today's cash open, get a little bit of a feel before we start to make too many comments on directional bias. So as I was saying moments ago about advanced decline line, check that out. Now it's not too often. We saw, the S&Ps were just down 25 handles a few minutes ago. It's about a 50-50 advanced decline line. So I was saying negate advanced decline line. It's not going to make a big difference. Speaking of which, take a look right now, Nvidia on the bid right at the cash open. This is exactly what we were talking about on Friday. It's what I was talking about on the weekend update. And that is expect markets to try to put a bid back under Nvidia. And here they come. They're going to come out screaming. And this is what's going to make this trade so incredibly dangerous. By the way, Meta is getting smashed into the open, down some $11, 12 now. I mean, huge move, though, in a short period of time. This is really putting some damage, though, back into NASDAQ. I mean, you have right now really interesting setup. It's Nvidia versus like Meta. Apple has a decent bid under it. It's not even going to make a difference at this point. Microsoft is off. Wow, this is again, it's an interesting cash open because it's battle of big tech. The Magnificent Seven is just all over the place. This morning's trade, though, again, we anticipated a bid to come in here and possibly fail throughout the course of the day. I don't know if this is the fail point yet, but I'd strap in. This is going to be a fairly volatile session, not just for individual products. Got to understand that like Nvidia and Meta now down, some 13 bucks, and it looks like it's going to continue to fall. But these underlyings are wreaking havoc back to the S&Ps. I mean, you're in a situation right now where most of your sectors, your advanced decline line's positive. Yeah, I'd pay no attention to that. Your ticks right now, kind of a moot point. They're flat ticks. again, pay no attention to them. It's not going to make a difference when you have the magnitude of market cap, okay, making these kinds of moves. Just to give you a feel for Meta, check this out. Auto expected moves, okay? It doesn't look right. These expected moves are all kinds of screwed up. I know we've got to be at the expected move. Here we go. So in terms of auto expected moves, forget about those for just a second. The way S&P is really starting to feel some pressure. Nvidia is taking on quite a bit of water here. Early on, it is through the lows, not only of overnight, it's through the lows of Friday afternoon. So we are coming apart a little bit here in a handful of stocks, which is taking the NASDAQ down dramatically. Check this out. Your moments into the trading session on this Monday, the entire week holds a $20 expected move in Meta, and you're almost there. Again, I'm not sure why the auto expected move is. It's all kinds of screwed up. Okay, Nvidia as well. Wild trade early on. We're going to go look the option statistics. Now, I know some of you might be a little bit newer into TheoTRADE. I saw quite a number of people discussing, saying hello there for the first time. Some people that I haven't seen in chat for a while. So welcome. You're getting thrown into the deep end of the pool right now. And that's simply because, well, first of all, we've got trades in motion, but there's a lot going on. And as I said to you, this is going to be some volatile sessions. One thing that is going to be of the utmost importance to watch today is this number right here. So this is a market on calls, this is a market on puts, okay? All I care about here is not the total number traded, but I want to see the number of puts traded at the ask or above. What I want to see in Nvidia, okay? Nvidia was driven higher by a rush of people, okay? Predominantly professional trading firms. They were buying calls traded at the ask or above. The exact opposite could be true of a down move in Nvidia if the marketplace starts to rush in, okay, and buy puts at the ask or above. Buying puts at the ask or above is just like, I'll take it. Right now, okay, in early trade, we are seeing exactly that. This is one of the first days in quite some time where you're seeing a very definitive put buying kind of start to the day, where the number of puts outpaces the number of puts traded at the ask or above is outpacing the number traded at the bid or below. It's just very decisive, okay, and a clean way to look at. If they're buying puts, it drives the stock lower, period. Okay, we'll see if it picks up though. It looks a little slow here to start. Meta, there's not a lot of option size, but take a look at trade at the ask or above. It's at 4,200. Trade at the bid or below for puts, 900. Okay, this again, but it's not overall heavy size, only 10,000 contracts. So Meta, by the way, hit its expected move for the entire week in the first 5 minutes of the trading session. Frankly, I'm really, really surprised how well markets are holding up in light of what you're seeing right now. And I want to explain. I see a capital rotation already, a big one. This is NASDAQ. Obviously, this is the bell. We just took off from 18,230, now down to 18,100 and basically 50 in this area. So what's 80 points amongst friends? There's already a bid back. We've already got half of that back. Check out the capital rotations today. We are seeing very, very definitively, and this is something I called for last week, is for right now, we appear to be rotating out of Meta back into Apple, okay? Possibly out of Nvidia back to Apple, a little bit of price action as well inside of Google. Why this is going to be so critical, as long as we're moving, market cap, for instance, from Nvidia to Apple, from A to B, whatever, it doesn't make a difference. As long as you're moving market cap from one to the other, the NASDAQ per se does not have to lose anything significant, okay? The risk comes today if Apple starts to tip back over at all. If Apple actually sees any softness Okay, let me pull up expected moves in here. That's what I thought. Apple is already at the upper edge of an expected move. I mean, we're 7 minutes into a trading week. Talk about all kinds of chaos in here. Yeah, the expected moves don't look very accurate this week. The auto expected moves. Here we actually have the entire week. It's looking at about a $5 expected move, but it's close. Anyway, what you're seeing though are rotations of capital at this point. So we're not too crazy just yet, but Nvidia is all over the place. So handicapping S&Ps, and just bear with me here. Handicapping S&Ps. There is no S&P, there's no NASDAQ, there's Nvidia and a couple of other tech stocks. Everything else is just getting battered around. The energy sector had a bid under it. It's coming off hard and fast right now. The financials, the exact same thing. A big bid in the first minute. They're coming off a little bit. There's no read, though, on the overall marketplace. And the reason there's no read in the overall marketplace, you can't get a feel, okay, until Nvidia starts to settle in a little bit deeper. And that's something it just may not do throughout the course of the day. We're going to look very, very detailed through this. Look at this. Nvidia, the number of puts now being sold is dramatic, right? This is, again, some wild trading early on in here. Some really wild trade. You're going to have to let this kind of settle in. We're going to go talk a bit about markets as a whole. We're going to look at some individual stocks. We're going to look a couple of trade opportunities that I put on last week that are still completely applicable. And then we'll move from there. There's still, again, a couple of trade opportunities, but, coming out of the gate this morning, look, I'm telling you, be a little careful this morning. Take your time. If you feel like you got to do something, sit on your hands for a minute. One of the things that is a bit of a standout right now, volatility is unequivocally on the move. Now, I'm not a big proponent of VIX. I look much more at vol futures. But if you're looking at vol futures, with all due respect, you got to go out to like these April volatility futures. The 9-day March volatility futures, not exactly doing it anymore. It's the April volatility futures. They're up and up nominally. Okay. VIX's bid. There's a big bid under VVIX. This is something I look at much more. I look at VVIX much more than I look at like VIX. Volatility of the volatility index. It's indicative of actual trade in VIX, meaning that if VVIX is higher, it doesn't matter, a couple minutes into the trading session, but if VVIX is higher, there's hedging going on right now. And that doesn't mean that VVIX can't drop, okay? But what you are seeing is one of the higher prints, obviously this year. I mean, not too much volatility throughout the course of this year, okay? But right here, you're seeing quite a bit of volatility. And the reason that I'm so adamant about watching volatility, okay? Volatility as a whole, as it pertains to VIX and VVIX, volatility is unequivocally suppressed right now because of a very significant trade. I'm going to talk more about that trade, okay, as we go on today. There's a lot of newer people here that may not understand. One of the trades that's going on is driving markets. It's this gigantic dispersion trade. In fact, sure, what the hell, we'll do it right now. So, because I'm going to let this marketplace settle in just a little bit here. Though, those of you that maybe little newer, okay, if you're newer, if you're back, please, by all means, chat in. I do not need to see the exact same people every day chatting in, okay? But hold on everything. All right. To explain the trade that's going on right now, one of the trades that's driving markets, okay, we look every day here at stocks like Nvidia, okay, and it's a little alarming to see stuff like that because they're parabolic. It's just ever increasing intensity. And so many people, look at this, Tesla even has a bid back under it. They like me. They really, really like me. Anyway, one of the things that is a driving factor to the marketplace, and I want you to be able to understand this, okay? Phil! Um, anyway, one of the things I want you guys to be able to understand is that a trade, not an investment, but a trade can drive markets, okay, entirely. And this is the primary driver of not only Nvidia, but of the NASDAQ. And I've heard so much about this, okay, just so much like it's a bubble, it's not a bubble, it's this, it's that, it's the other. Look, first of all, if people are talking about a bubble, it doesn't matter whether it's a bubble or not. They're talking about it. Okay, the psychology of a bubble is in their heads. Neither here nor there. By the way, that's been the big argument, lately. It's a bubble. It's not a bubble. It could be a bubble. It might not be a bubble. Who cares about your bubble? You got to understand the trade that's going on. The trade that's going on inside of not only Nvidia and many of your tech stocks, okay, is what we call dispersion. And one of the tactics used in dispersion to explain this is just very, very simple. Okay. What trading firms do, and it is trading firms proprietary. And by the way, people look, it's not, those market makers are screwing me. Okay. Yes, but not really. Okay. One of the trades that's done in a dispersion, all right, is you sell, okay, index vol. So how does one sell index vol? They go out and they can actually use 0 DTE, usually like short duration options, and you do it in mass quantity. So if I open up these 0 DTE options and I'll pull up just volume, forget about open interest. Open interest is it's nominal. If I pull up volume, look how much volume has already traded in the SPX today. Now, 2,000 contracts doesn't sound like a lot, but it's 2,000 contracts of a $5,110 product, which is how do I say this eloquently, a proverbial crap load. 4,000 contracts of the 41, 40s have already traded, 51 40s, whatever the hell it is. Okay, I got that one. Look at this, 5,000 contracts, 5,100s. These are huge numbers. You're only 15 minutes into a trading session. So firms are going out, okay, and they are blindly selling boatloads of calls and boatloads of puts. Now, you or I would look at that and you would think that's catastrophic risk. Am I wrong in saying that? Okay, this would be catastrophic risk. Don, you can't just sell options naked. They're not just selling them naked. Okay, so the tactic is you come in and you sell index options and you sell them in just enormous quantity. And then you take every penny, okay, that you collected in selling premium and you force it into something like Nvidia call buying. And call buying in Nvidia, okay, has unequivocally been the determining factor in moving the product higher. If the trading firm buys calls, the market maker must sell them calls. The market maker sells them calls, okay? And again, I've laid this out so many times, it's pretty much ad nauseum, but you have this trading firm, okay, that's buying, I'm going to get this right, okay, trading firm that's buying calls. When you buy calls, you're positive delta. The market making firm, we'll call them the MM, has to sell them the calls. When they sell calls, they're negative delta. Then the market making firm goes out and adds positive delta. How do they add positive delta? They buy stock. So they buy stock and they add positive delta to that. So they're zeroing themselves out. The trading firm over here is buying calls, might be making money as long as the shares are going up. Now, these trading firms, they don't care whether Nvidia goes up or not. But I wanted to show you buy stock. Okay. If you're buying stock, you go, well, how are these market making firms getting rid of the stock? Remember, the market making firms are selling calls. If you sell calls and the calls end up in the money, calls the stock away. So you actually zero out at the end of the week. It's freaking brilliant. It's actually a way to buy stock and sell it without ever going out and selling it in the open marketplace. So, it's all this conjecture right now about individuals like it's a bubble, it's not a bubble. Okay. If you're even having that conversation, they don't understand dispersion. There is several things though that you need to understand about dispersion. Okay. The dispersion tactics cause wild distortions of volatility, one of which is very often a suppression, okay, of SPX volatility. What's suppression of SPX volatility really mean? A suppression of SPX volatility means if everybody opens the market today and starts selling options, it actually pushes volatility down. Everything that you have to understand about markets is about supply and demand dynamic. If people want to sell boatloads of options, that causes what? Supply to the marketplace, okay, will douse volatility. It's like throwing cold water over volatility. So one thing you got to understand is the VIX itself, and the VIX is a measure of 30-day volatility. The VIX itself very well, okay, may be suppressed. It has like a blanket over its head. And what you look for in a dispersion coming apart, okay, is a very gradual move higher in volatility, okay, and then it goes boom, parabolic. That would actually be the dispersion tactic coming apart. Everything comes apart sooner or later. So why does the dispersion come apart? The dispersion comes apart because the partner in the dispersion, which in this case would be like Nvidia, stops going parabolic. And all of a sudden, the S&Ps can start moving more than an Nvidia. And then they're in deep beep, and then they're so beep that they don't know what to do. If you see, okay, Nvidia start to get all kinds of funky, which it clearly is today, okay, look out. Also, look out for major moves in volatility itself. So you wouldn't just look though at VIX. I would look at stuff like VVIX. And the reason I would look at VVIX, the volatility index. If these trading firms believe that the dispersion trade is coming apart, they're very likely to go in and trade VIX itself. Okay, they'll trade VIX itself, and you go, well, why would they trade VIX? To hedge off the possibility of catastrophic risk, and their volatility risk can get out of control quickly. In light of whatever you might, again, believe, there's no conversation that's happening in any one of these trading firms about a bubble. It's like the last thing on their mind. That's a bunch of monkeys that are on CNBC. It's a bubble. It's not a bubble. It's so bubbly. Okay. I even saw like all these people doing like research about market cap and how the Magnificent Seven are cheap on a relative basis. Okay. How about you're being led down a rabbit hole that there ain't no rabbits in? There's just a couple of monkeys in there, but there's no rabbits in down the hole of bubbles. The only thing that the discussion of bubble does, when you start discussing a bubble, that's in people's heads. And the second you get that into somebody's head, that's it. The volatility starts to pick up. So if the volatility starts to pick up because people are getting nervous, that unto itself is almost self-fulfilling to unwind some of the dispersion. And that's, again, we might be at the forefront. The reason that I'm mentioning this, we very well may be at the forefront of that trade starting to unwind and come back. Okay, speaking of coming back, the energy sector is taking a little bit of a hit today. Not down big, but definitely weighing in markets a little bit. What is holding markets together is Apple has a good size bid under it. Google has a good size bid. Now remember, both Apple and Google, no one has loved these stocks at all this year. Okay. There's no love for Apple. It's down, almost 7%. Google's what, flat? Here you go. It's flat now on the year. There's no love. It doesn't love me anymore. Anyway, if you look at something like Meta, though, it's up 40%. So I'm going to tell you what I think, okay? And then I'll tell you what we're actually seeing. Well, do it the opposite here. What we're seeing right now is exactly what I prefaced last week and a little bit on the weekend update. And again, I was talking about this earlier. We expect at some point NVIDIA, okay, and Meta are going to rotate back, okay, to places like Apple and back to places like Google. So we fully anticipate capital rotations in major tech stocks. Again, let's sell Nvidia, let's sell Meta, let's go back to buy Apple, and let's buy Google. Now, that's what's going on, like literally. Now, what do I expect? I'm going to tell you exactly what I expect. I expect that they're going to rotate towards Apple until they don't, meaning that we're going to rotate towards Apple, and this could be happening, well, it doesn't matter right now, but you're going to rotate towards Apple until the advanced decline line starts to cough up its cookies a little bit, and we start to see higher degrees of correlation. There's one thing that you need to recognize. If we start selling off in S&Ps, here we have the S&Ps down, okay? It's only 0.3%. So don't get all hopped up, and it's a 0.5% in NASDAQ. Don't get all kinds of crazy, okay? But it's a situation, okay, where the S&Ps are down. We have a 50-50 advanced decline line. Nothing is taking real damage here other than Meta today. Nvidia is down some 1%. Nominal, okay? The point that I'm trying to make is rather nominal moves in some of the big tech stocks are still causing, in a 50-50 advanced decline line, all kinds of chaos in the S&Ps. What you need to be fearful of is higher degrees of correlation. And that basically means, okay, so we're rotating right now away from Microsoft. We're rotating a little bit out of, Amazon. And Amazon, this thing's basically at all-time highs. Like there's no, if, in, or, but about it. It's coming up to all-time highs. Google, however, came off the all-time highs already. You have obviously Microsoft just off its all-time highs. Anything that's coming off all-time highs, like Microsoft, like an Amazon, okay, Amazon's right matched with all-time highs, like Meta, you need to be a little bit afraid because those have enough power in them to actually cause markets, obviously, to pull back. What you got to be afraid of, though, is when we see higher degrees of correlation. What we have not seen lately, okay, is all tech stocks really down. And when they do, and they start to correlate, like last Tuesday, we saw all tech stocks down, and the S&Ps were down 70 at one point. Okay, but there were still areas where, like Nvidia, closed higher last Tuesday, right? I'm literally, I'm talking about last week, because last week you saw most of the tech stocks down, and they were down big, but Nvidia actually closed up on the day. Be mindful of it as this day goes on. Okay, the advanced decline line is still a 50-50 over here, but you're seeing that marketplace still take a little bit of a hit. The risk that we take is, as the day or as this week goes on, all of a sudden you start to say, you know what? And now we're going to throw the towel in on Apple too. And that's when things can get really crazy. Nvidia is enough to cause damage to the overall marketplace. But if you start throwing in, again, a few of the other stocks like an Apple or like a Google, okay, this marketplace is going to feel very different in a hurry. Right now, okay, we're just kind of moderating. Look, we're right down very close to some of the lows in the overnight session. Okay, volume in the S&Ps. We're going to talk about this quite extensively. Volume in the S&Ps is almost unreadable because of the roll. So I'm going to spend some minutes on the roll here as well. But before I do that, I want to talk a little bit about expected move, kind of what to anticipate this week. Again, I thought that to me, one of the most important things to understand right now is that this trade, this dispersion trade that has moved markets, okay, for months now, it does have the beginnings of starting to come apart a little bit. It's not over yet. And the thing about like a dispersion trade is they'll keep attempting it, okay, until the chicken is just done. And when I say they keep attempting it, you'll see consistent attempts to, well, this is pretty even in here, to buy calls, to buy puts, to drive the dispersion. There is also, okay, albeit a very small window of opportunity in here in this dispersion trade, and I want to make this very clear, okay, you could see dispersion flip over and just want to buy puts. Okay, and that's one of the reasons we're watching that so carefully. If that were to occur, first of all, it would stick out like a sore thumb. But if it were to occur that in this trade they start to buy puts, you'll know it. Nvidia will start to get really wild in terms of price action to the downside. That would be, I mean, felt in markets dramatically. All right, let's talk a little bit about expected move and a couple of other aspects. And again, there's a lot of evidence of some of the trades coming apart. First and foremost, we are in the middle of a roll. The roll, for those of you that don't understand futures contracts, that's okay. Like you don't have to understand a lot other than the fact that you have this contract that expires quarterly. Okay. Now this is the index futures contracts, and specifically, this is the S&P 500 index contracts. When do they expire? There's an expiration, okay, of March, which is coming up. Okay. We have June, right? Then what do you have? You have SEP. Okay. You can see all of these on here. And last, these. So there's quarterly expirations. These are rolls. When there's limited time left in the March, everybody is moving from March that wants to move into June. Eventually, move from June to Sep. Okay, the active contract is now June. Now, March trades at a different price than June. Why? Cost of carry. All right, remember that they trade at different levels because cost, okay, of carry. What does that basically mean? When you trade, okay, a $5,100 futures contract, it only ties up pretty nominal overnight margin, right? But you're controlling a huge amount of S&P 500. If you're kind of curious what a contract is worth, okay, I'm just going to bring up the trusted calculator here. So every point that these contracts move, you make or lose 50 bucks. NASDAQ cresting through lows right now. Every point that you move in here, so it's 51, we'll say 65, okay, times 50. Every one of these contracts is worth, okay, 250,000 bucks. So if you trade a contract, it's legitimately worth $250,000 right now. Every one of these contracts you trade is $250,000 in notional value. So if you took $250,000 and you multiplied that, okay, times the risk-free interest rate. The risk-free interest rate, oh, let's put it at 5%. So you the 5%, you put the decimal 0.05, and then divide out, okay, the number of trading days in here, yada, yada, yada. Okay, so you take 365, whatever. Okay, you guys get the point. You can just put like, I don't know, 100 days in there because it has about 100 days to expiration. You can figure out where the additional, okay, there's this contract here is about 60 points greater than this contract here. And 60 points in there, that's the cost of carrying $250,000 for the next 100 days. Does that make sense to everybody? That's why there's a differential in price in here. Okay. People make up as is this, it's that. It's a damn cost to carry. And you go, how come I didn't see it over all these years? That's because many of you started trading, okay, in a ZERP or NERP. A ZERP or a NERP. You started trading, okay, in ZERP, which is zero, okay, interest rate policy, which is, and then there's NERP, which is negative interest rate policy, okay? My NERPL might be coming to an end later this week. That's actually going to be some big news later this week. Later this week, if you guys have no idea what I'm talking about, Japan might be pulling out of negative interest rate policy, yet they are still technically in a, well, they are technically in a recession. So let's get out. Let's raise it. Okay, let's raise it. NERP, ZERP. It's all good. All right. Yeah, so you have cost of carry built in there. And it's weird because all of a sudden interest rates are over like 5%. And you can actually do some of the math. It's kind of cool, right? So do some of the math out there and you kind of figure out, if you have this $250,000 product, okay, and you multiply it by 0.05, that's kind of the interest rate at 5%, yada, yada, yada. We can go through in a million different ways and start to look at like what interest would be on here and then divide that. All right. You'll figure out real quick where the money comes from in here. There's 60 some odd dollars of change in here, right? So the difference between these is 60, but each one of the points is times 50, okay, equals about 3,000. So if you had that 12,000, divided it by about, 4, it comes out to just about that. I just did the quick and dirty way to teach you about what is right now the interest rates and the cost to carry. SPOOs are down 30 handles. You were starting to see Nvidia play maybe just a minor role in here. The real hit right now, people, is Meta. Okay, Meta is taking on significant amounts of water, taking water on over the bow. Microsoft is also starting to take a little bit more of a hit. And again, Microsoft, decent sized move to the downside of no concern. Interestingly enough, I haven't talked enough about Amazon lately, which crested to highs coming off a little bit. I would watch Amazon very carefully. This, to me, if you are looking for opportunities right now, okay, Amazon, opportunity in the near future could come off very, very big. Why? Why would Amazon sell off big? Because it's completely unscathed. So what's going to happen, it looks like, in this marketplace is you look something like Apple. Apple is not unscathed. Apple is down quite substantially, not only on a year-to-date basis, but Apple's also down from this 200 price level, right? Okay, Microsoft, okay, is technically unscathed. I mean, it's only, a couple of trading sessions away from what was basically a high. All right, these are big reactionary highs, but that's good. You're at 415, whatever. Okay, Microsoft, rather unscathed. Microsoft could be an incredible opportunity to the downside. You have to look at what can drive markets a little bit lower, right? Financials. I'm already in a financials position. Specifically, I'm in a Wells Fargo position. Let's go look at the Wells Fargo position. This thing has been absolutely impervious, okay, to anything. Look at this. I mean, it's effectively straight up. The slightest rollover here is going to help us. I'm looking right now at opportunities that are a bit to the short side. We've had an amazing rally up, okay? The skew is also such that, the bearish positions play nicely. Speaking of which, if you're looking right now for a bearish position in Wells Fargo, well, I already have one on. Its earnings are not until April 12th. So anything that you trade in Wells Fargo, okay, anything you trade in Wells Fargo, do not use the April 12th or later expirations. Don't, okay, cross through earnings. So you just kind of block all that crap out. So the furthest you can go out is 25 days. If you want to be in the Wells position right now, come right here to the April 5th, okay, wrap current stock price. When I say wrap current stock price, this is an in-out spread. If you wanted to be in this trade right now, here is your trade, okay? Here's your trade. So I will pop this into the chat room for those of you that are newer and do not have that on, okay? Again, that is for people that are newer, okay? For newbies that do not have on the WFC position, okay? I'm going to paste it again next to it so everybody sees it. Oh, messing things up over here. Oh, this thing is going to it's going to annoy me. All right. If you don't have the Wells Fargo position on, I gave you a separate position. When do you close that? You pay about, I think you could probably fill the trade for anywhere from, if I can actually copy and paste it in there, there it is. I think you could fill the trade for 80 cents, maybe it'll fill for 80. Just let it work in there. I mean, stock's down, it's down nominally, but I still really like this one, and I like it because it's run up a little bit more, but again, probably on borrowed time. You don't need a humongous down move. I want to make that clear. When you're doing a trade like this where, your 57, 55 spread, or the one that we have on is a 56, 54 spread, you don't need a huge move down. You need to move down a little bit below 54 and, you're home. And that's all we need. And I'm not asking for a lot. Move right down here to 54. That's one bad trading day. That's it. You need one bad trading day. I like it. I like bad trading days. Okay, so that's the Wells Fargo position. There's another one that has plagued me. Okay, and that has been Caterpillar. And I still like this trade. Now, okay, the problem I've got in Caterpillar, first of all, the earnings are quite a distance away. Problem I've got is my trade only has 11 days left. Oh, it's gonna be so close. It's gonna be so close on this one. Okay. My trade is the 325, 320. If you wanted to still be in this position, you can go out 25 days again, but you got to use $5 wide spread. This would be your trade. Okay. And I'll copy this one and give you yet another in-out spread. All right, for the cat position. And the reason I'm giving you these spreads, there's going to be a lot of them coming up. Newbies. Okay, let's here we go for newbies. All right. There we are. So for those of you that are newbies, that one's good. All right. Now, timeout. I just threw two trades into the chat. I already have those on. Okay, if I take a quick glance right now over positions, and then I'm going to come in and talk a little bit about expected move. It's weird because when days are slow, I feel like, oh my gosh, an hour is way too long. And then days like this, there's so much to do right now in this marketplace. I got things to do, places to go, man. I'm losing my mind because I want to trade a couple of different things. Oh, let me look in here. I gotta look around, people. I got crap to close. Oh, I'm on the dance floor. I'm on the dance floor. All right, closing that up. Another catapult trade. Catapult. Oh, it's not giving me a delta. Damn. All right. Okay, onward and upward here. So sorry, I'm looking at a catapult in here. What we're going to do next is we're going to look at expected move. I think it's kind of important to give ourselves orientation of where we are for the week. What should we expect for the week? It has been a pretty phenomenal move in markets lately, clearly to the upside. And right now, some volatility starting to pop through. Can't stress this enough. You're seeing the S&Ps right now down 30. That's right. 50-50, oh, swing and a miss. 50-50 advanced decline line. I can't circle. Okay, you can tell I'm starting to get some caffeine in me. By the way, this whole like time zone change thing sucks. It sucks, I tell you. Okay, daylight savings time is ridiculous. For those of you that don't know this, so I go between the U.S. Virgin Islands. I'm not in the Virgin Islands right now. I am in Arizona. It's cold. Anyway, it's going to be like 78 today. It's chilly. I'm in Arizona right now. And in Arizona, we don't change clocks. We don't change clocks, though, either on the island. It's weird. I live in two places that we don't change clocks. But if you don't change clocks, it changes your whole life. Here in Arizona, the market now opens on Pacific time. So the market opens, of course, at, ridiculously early. 6:30 doesn't sound early, but you're going to get up and you're going to speak to a few thousand people. You got to get up pretty early because I can't wake up at like 5:30 and speak to people by like 6:30. It's just, that's not going to happen. If I'm not up like almost 2 hours before, something could come out of my mouth that I had no idea. Anyway, this whole daylight savings time. So Byron, you're correct. Arizona does not change clocks. We don't change clocks, but that screws up your life because everything moves like an hour earlier. Okay. Although it's kind of nice to wrap up at 1 o'clock. The markets are closed by 1 o'clock. I usually have enough time to go even take a nap. Well, you have to take a nap. This week, if I don't take a nap, okay, I'll probably have like a mental breakdown by like Thursday. There has to be a nap somewhere in there because I have kids that are starting to become like teenagers. They don't let you go to sleep like 10 o'clock at night. It's basically like teenagers, two boys, a girl. It's like running an asylum at this point. I would have to assume they don't use the term asylum anymore, but I think it's actually a very valid term when you have like teenagers in the house. Okay. It's because everybody is completely and totally mental. Crap is flying around your house like you think it's the room from Poltergeist. And that's usually every evening, but they don't let you go to sleep ever. Okay. I have to sleep with like an eye open now too. I don't trust the teenagers. S&Ps are about to crash through lows. You're going to see some big volume spikes over here. Nevertheless, you get like maybe 6 hours of sleep. That does not work well, but it's kind of nice after you adjust to it. After you break through that, whole tired mental break thing, I'll be good on the other side of it. Okay. I'm not in Payson. I am in Paradise Valley right now. I do have to go to Payson though later this week. Okay. I haven't been in the Payson house since December. I need to go. Okay. I got places to go. This is interesting. The volume should really take off here, and it's not. I assume that people are still trading the previous contract. Okay, we got to move on to expected move over here. Um, yeah, no, I know. Like Hawaii sounds really good until you realize market opens at 3:30 in the morning. That's not okay. 3:30 in the morning? No, thanks. No, thanks. Yeah, Paul, no, I'm cold and I'm not even in Payson. No, I can't when I come off that island, it never gets below 75 degrees there on the island, ever. So seriously, like I don't mind cold weather at all. But the last couple of years since I've been on the island, I can't do it anymore. It's like it sucks. Look at this. Ticks are barely negative. The advanced decline line is a 50-50. People, it's all tech. Okay. And again, here's the cautionary tale. Nvidia is not moving. This should make you nervous on a couple of different fronts because Nvidia not really moving, whatever, down like 1.65. Do you realize Nvidia? Okay. Oh no, it's come back to where it was last Wednesday. It's oh no, it's dropped to where it was last Wednesday. You haven't even scratched the surface of Nvidia. That's why you need to be careful here because the S&Ps are down 0.6%. You're definitely damaging Meta to some degree. Okay. Oh no, call me crazy, but yeah, Meta's actually doing some damage. This thing's back, well, it's unwound 2 weeks of work. Oh, but still my heart. I mean, it's that you almost have to laugh about it. Oh no, it's back to where it was in the middle or late portions of February. Like Don, it's only like early March. It's almost mid March. But in any regard, you can see even Meta getting whacked back. Like Meta's not getting whacked till it hits like 400. At that point, you'd feel some pain. So when you look at S&Ps and you start to think like, it could be the beginning of something, okay, but it's still nothing. At the beginning of something is still a whole lot of nothing. It was up 50%. Now it's only up 38%. Oh no. Okay. And again, I'm being facetious with this one because you got to be worried when you're down. Don't worry, you're only up 78% in the year and you're down 1.5% today. There's been no real selling in here. This is still enough too to bid markets right back up. I'm going to be clear about that. You have Apple that's positive. Okay. You have Google that's positive. Meta's not coming back today. Even if it bounces, it's not coming back to positive today. Nvidia, never count this thing out. This thing could be up another, 50 handles today. But okay, it could also be the day that throws the towel in. And we're going to look at its volatility in just a moment. All right, so we put two trades in there. Okay, Mitch was saying, do you put in a GTC to close WFC? Okay. Oh, okay. Whoa, yes, I do. I use good till canceled all the time. And here's how you actually do a good till canceled. So if you're going to do a good till canceled, you take your 80 cents, okay, take your 80 cents and multiply it by 1.55, and that'll equal your GTC. Got it? Good. Okay. So that's what I would do in there. There is no hedge. Robert was asking, small Ultima does not have a hedge on. I do not have a hedge because I do not have any put sold right now. Okay, I'm waiting for what? For it. Okay, I'm waiting. All right, let's get down to business here in SPX. because there's actually a lot to cover, and I only have like 13 more minutes before I got to turn it over to the professor. Anyway, um, right down to business here. The expected move this week, this is for the entire week. The expected move. Now, there's two different expected moves. Okay, there's a weekly expected move, which is this week is plus or minus 82 bucks. It's a big weekly expected move, an $82 expected move. Normally, I wouldn't spend like, more than 2 seconds on it. Yeah, whatever. You should spend some time on this. Why? Because last week was only 64. This is a $64 move. This is now an $82 move. Why? Why the big expected move? Okay. Why so funny? Anyway, the reason there's an $82 expected move, of course, you're going to tell me it's CPI. Please. Okay. There was Fed announcements back over here, and there was not an $82 expected move. Markets are ready to rumble right now. It doesn't matter why you think, okay, there's a big expected move. Okay. The one aspect that you need to also get into your head, okay, and this is a really big one. Over the weekend, the expected move grew, not diminished. So if you think options always decay over the weekend, wrong. Over the week, coming into the weekend, the expected move is only 82. Now it's 83 and change. You're an hour into the trading day of a week, and the expected move has expanded. Volatility is expanding right now considerably, and you can't see it reflected in VIX. Yes, VIX is up, but VIX does not use any options in the equation, okay, that are less than 9 days. There is a big expansion in short duration volatility such that the expected move has picked up. CPI, okay, is coming tomorrow. CPI is out tomorrow morning. You realize between right now and tomorrow morning, we have a $52 expected move. That's some serious crap. Why? Well, all of last week, again, held a $64 expected move. We had a lot of stuff going on last week. So like Jerome Powell testimony, big data and PCE and crap like that coming out. Okay. CPI, yeah, whatever. Nobody cares. But I'm telling you right now, it's not just the CPI. The volatility is big in the latter portion of the week. Okay. There was also another very alarming thing that you need to be aware of. Take a look at this. All right. You're like, what am I looking at? This is on Friday. On Friday, 65 million option contracts traded. Okay. Was it a really crazy day on Friday? No, not really. The S&Ps on Friday closed down 28 handles. It was a volatile session, but they closed down 28 handles. I want to show you, though, what is interesting over here. The average this year, okay, and it is something that you best understand and pay attention to. The average this year, okay, has been 48 million. It's right there. That's the 2024 year to date. March has picked up a little bit. It's 54 million. We did clear up to 65 million. That's one of the biggest contract days ever. I'm going to say that again. Something is going on when we're trading 65 million contracts. So you say whatever you want. Volatility, okay, is starting to bleed through. We're doing 65 million contracts. That's huge by huge, okay? So be aware, volatility is really picked up. There's one other number that I want to share with you. Okay, the other number I want to share with you is today's expected move. If you take a look, this is March 11th. It's basically a $30 expected move. We already hit it and went through it just a little bit. So we're supposed to move 30 bucks today. Now, can we move more? Of course we could. All right, just be aware though, we've already done what we were anticipated to do for the trading session. So again, don't have a lot of preconceived notions about what today is supposed to look like. The advanced decline line is 50-50. Clearly that means nothing. Big tech has big market cap. A lot of stocks that have been favorable lately, and I'm using Caterpillar, I'm not using one of the big tech stocks. This thing has been favorable all year long, okay? I mean, there's only a few down days inside of Caterpillar. Today, getting whacked back by the tune of almost 2%. So heads up on that one. All right. So again, this is coming off just a bit in here. A few other stocks that have been, okay, no one's loved, like Starbucks. There's no love in here. It's got a bid under it. Okay. I'm just bringing up Intel. It's kind of middle of the road. It's been whacked lately. All right, it's got a little bit of a bid back under it. Watch financials carefully today. Financials, okay, have been one of the most loved sectors for absolutely unequivocally no reason. If you want to know if the sell-off is really going to get big, all right, if S&Ps start to sell off, they have to come for the financials. And what I mean by that is the financials would really start to participate in the downside. Not sure that that's going to play today. All we have today, okay, is one really crappy day in Meta that's actually kind of bleeding through to the S&Ps. Like Microsoft, come on, it's down 1%. That could get much bigger on the day. But from a sector point of view, financials are doing nothing. Energy, okay, nothing. It's 0.3%. Looked like it was actually going to tank, 0.3%. Costco, okay, there's no love after the most recent earnings. They're starting to hit this. Stuff that has been bid into Never Never Land is being sold. Stuff that has had no love, like Apple, is being bought. So right now, there is still a rotation, okay? What you got to be careful of is when the rotation stops and the advancers start to drop. I keep looking at the advanced decline line today because I'm telling you, okay, both financials and that AD line would definitely tip us off if this is going to be a broader market sell-off. Okay. CPI coming out tomorrow morning. There's nothing you can do. Just sit back and relax. Doesn't matter. The market's kind of like, preordained. Like, don't worry about the CPI tomorrow. There's nothing you can do. And even if you had the CPI number in your hand, and I'm not being facetious with this, but even if you had that number in your hand right now, you still couldn't make a good decision based on it. I don't know how the CPI is going to influence the marketplace. I saw that, was it Redfin this morning? Came out with rental numbers. Okay, they were ridiculous. Okay, rents in homes. Redfin is real estate. Rents from homes. It's ridiculous. They just keep going up. Okay, and it's actually one of the things that influenced the marketplace this morning. I don't know if you guys realize that. Some of the numbers from Redfin, which here can actually see it hit the tape. Okay, rents climbed 2% in February, the largest gain. Okay, in over a year. You have to love that. Why? Because that's actually going to lend itself into CPI. Normally I wouldn't even consider that, wouldn't even look at it, but I got to tell you something. That was actually moving markets this morning. The Redfin numbers moved markets. All right. By the time they printed it and you saw it, we were already down a little bit here. But the next big number on your screen, unequivocally, is going to be CPI. And then in the latter portion of the week, strange as it may sound, like Bank of Japan, okay, is also coming out. Where the hell is it? I don't know, somewhere in the middle of the night. It's one of these like middle of the night deals. Anyway, Bank of Japan is going to speak later this week. And that could also be a pretty significant event for currencies and so forth. Moreover, again, S&Ps are right now, they're on the lower edge of the expected move. So to be mindful of this, though, you have an $84 expected move this week, $82 expected move, apologize. $82 expected move. So to see $30 of volatility today is nothing. Okay, it's a big nothing burger. But I keep stressing there's a reason that expected move keeps expanding out. Okay, we one last look over here at Nvidia. Okay, Nvidia, while the marketplace is kind of degrading under us here, Nvidia has actually got a bid back under it. What I want to look at is something that I looked at on, of course, I looked at this on Friday extensively, and it's of critical importance. Go to equity, Chevron subgraph. Okay. What we're looking at here is implied volatility. Okay. We've basically mellowed out. Volatility is coming off. That can actually be construed as a very positive sign right now, okay, for Nvidia. Not a lot of fear in there. What we saw last week, okay, was absolutely wild. All right, I'm just going to zoom out for a second. This is on Friday. Volatility spiked, okay, and the volatility spiking in Nvidia just made it was impossible to want to go buy calls. Calls went from a 61 vol to 72 vol. I mean, this is the net 30-day volatility in here. You can see we're back to some of the lows, 65 vol. We're not out of the woods though just yet. If Nvidia starts to spike again, I assume that volatility is going to come flying. Okay. We're in a very interesting area in Nvidia right now. There's enough attention being drawn to the volatility such that every time it rallies, the volatility will go up. That's right. When the stock rallies, volatility is going to go up. It's going to make it very, very difficult for trade to want to participate to the upside right now in Nvidia. So Nvidia, it has to either consolidate or sell off substantially, in my opinion here. Okay. I think that there could be some big attempts to rally. Don't get me wrong. There's going to be some attempts to rally, no question about it. But for Nvidia to continue higher, it would have to consolidate considerably at these levels. I don't think it has consolidation really written in the tea leaves out there, but be careful in Nvidia, because this can be the linchpin to really take this marketplace apart in the trading session. Pretty disconcerting. Meta just continues to sell off a little bit here. Looks like it's about to cross through some lows. So I gave just a couple of trades that I already had on. Okay. By the way, I didn't even mention like Boeing today. Look at this thing. It smashed again by 4%. Department of Justice opened up, they're investigating. So this should be interesting. Okay. They don't like it. It makes me want to fly in a Boeing 737 MAX 8, possibly 9. Okay. It's good stuff. It was just a wheel that fell off. You don't even need a wheel. Okay. It's just a wheel. Nobody got injured. It just destroyed a couple of cars in the parking lot. There's actually a lot of incidents though with Boeing. Okay. Speaking of Boeing, look at the move inside of Caterpillar. So there's definitely a rotation to hit some of the strongest stocks in the S&P this year. I'm going to leave you with that thought. There is a rotation right now going on. Okay. We are seeing sell side activity of almost everything that was incredibly strong. Okay. And it really market leaders, if you will, on a year-to-date basis. Costco obviously has been one of them. Costco has been, again, it's not like marquee, like, a Microsoft or a Nvidia. Costco has had a bid all year long. Okay. Caterpillar has had a bid all year long. I'm telling you, watch stuff like Wells Fargo. Okay. This thing has been impenetrable the last few weeks, straight up. GE, another one. Okay. Can do no wrong. Had a huge, reversal in here. Right now, though, the hit that we're taking in these products, the capital is being rotated. That's why the advanced decline line is sitting near 50-50. With that, I'm gonna bring on the professor. Jeff Bierman's coming on in here. I should have some more. Well, we're gonna let this marketplace kind of relinquish and settle in a little bit, and should have some more trade opportunities tomorrow. Tomorrow probably also. I'm looking at the idea of some more catapults in here. I think that's going to be a viable strategy in the near future. Anyway, Jeff Bierman's coming in, spreading the wealth, upping the ante on volatility band indicators. Just note, Jeff Bierman is the professor, literally and figuratively. He actually does kind of a coaching session. So in the second hour, expect to learn something. Stay tuned. Jeff Bierman is coming on right now.